Hello, everybody. Welcome back to another episode of The Rational Investor. This is Julian. Brian's not here today. I'm here instead of Brian. You can get mad, whatever. Every Thursday is Baby Powder Report Day, which means that I am doing the show. Welcome, Sean. Welcome, Mr. Big House. Welcome, everybody in the Zoom call, internal TRI members. As usual, we're going to do our quick 30-minute show. We're going to go through everything that's happening in the markets, what I expect to happen, especially focusing on the S&P and Bitcoin. We're going to check what the breadth is telling us on our internal engine. And we're going to go through, what else are we going to go through? We're going to go through what's happening with options expiry, big options expiry, quad witching tomorrow, which is the reason, if anybody's curious, why are we rallying? That is why. We literally just rallied to max pain level on the S&P. So we'll get into that. We'll also look at max pain on Bitcoin, although the options expiry is very small. So there's no big options expiry on Bitcoin until the end of this month. So I don't actually think we even need to pay attention to it. But the reason the market is rallying is because it needs to cause max pain for any options participants. Okay, you guys don't care about my face. You care about the charts. I'm going to shrink myself, get rid of this silly background, and then we'll jump into it. Let me shrink. This is the hardest part. I got to shrink down. Okay, shrinking. Okay, get rid of the media source. Let's pull up the charts. Let's move me over here. Okay. I think that's small enough, right? You guys think smaller or bigger? I always do this. I think this is a good size. Right there. Yeah. Just right. Not too small, not too big. Just right. By the way, while I'm talking, if anybody has any specific topic, just shout it out and maybe we could talk about it. We'll see. I kind of have a strict routine that I want to follow so that we can get through this in about 30 minutes before we go to the after party. And the after party is like literally any stock or crypto you want me to look at, I will look at. Sean, something like Zcash, I think I'll look at in the after party. So when we go and do that stream, I can definitely look at Zcash, but appreciate the request. Okay, let's pull up the dashboard to start. TRI dashboard. Oh, the widgets didn't load. Okay, let's refresh that. Let's pull up the SPY on the options market. Let's see what's going on with Forex. Okay, so news that hasn't come out. The only big thing left is average hourly earnings and non-farm employment change. Oh, nope. This also needs to be fresh. Why is it showing March 10th? Wait a second. Let's look at the dashboard first. Thank you, Sean. Appreciate that. So while those are loading, what we can look at is we can look at investor sentiment. So one reason the market will not go down, why we're kind of in this just ranging market for almost 6 months, is because investors are too bearish. Everyone's just too bearish. Look at this survey. Only 19% of investors are bullish. The rest are neutral, and 48% is bearish. And it's been that way the entire month. There's been slight increases in bearishness, but I think that the market, so if we go back to look at the market, let's look at where the market topped out. The market topped out and finally rolled over by February 16th. So what was the sentiment then? Last week of February, it was 21% bullish, 40% neutral, and 38% bearish. So basically, this is telling me that we need to go below 40% bearish for the market to feel, okay, we can go down now. We can go down. It's interesting that the bull-bear spread sentiment indicator is still in the greed section. I'm surprised by that, considering the sentiment numbers I'm seeing here. It's very interesting, but definitely a site to pay attention to, the AAI.com sentiment survey. Definitely a interesting metric and something to keep an eye on, and something I like to check. Okay, Forex Factory. So what other news we have here? The big thing that came out today was the European Central Bank. Everybody thought they were going to only increase by 25 basis points, but they increased by 50, which sent a shock to the whole system, likely, and explains why we dumped quite a bit before the market opened in the U.S. session. However, once the U.S. session opened, market makers had to push it higher. They had to, because why? Here's why. So options expiry tomorrow, quad witching. It's the biggest options expiry. Look at how many. Okay, so just to show you the difference, let's look at the 16th. So this is, look at how many options are expiring. 390 or 10,000 puts, 9,000, 10,000. You know, the most is 23,000 puts at 380, which obviously are going to expire worthless. But let's look at tomorrow. Look at the numbers. 100,000, 120,000, 100,000 calls, 70,000 puts. So looking at this, the expiry tomorrow, where is max pain? Max pain is 394 or higher. Okay, and where did they pump it to? We're at 393. We're right there. All they've got to do is pump it a little bit higher, and we hit max pain for most investors going into Friday tomorrow. All they've got to do is keep this until like halfway through the day tomorrow, and then all hell can break loose. It doesn't matter. Then we can go back to following TA, deal with whatever the latest news event is. Until then, the market's main focus is causing the maximum amount of pain to the maximum number of people. I mean, that's always the focus, but there are certain events that adjust things. But when you have a expiry like this big, this is the one you want to pay attention to. This is the one that moves markets. And this actually gave me the confidence to take multiple very profitable trades. I actually sold down here when we were down here at 38.40 because the VIX was so high. If we look at the VIX, right? So let's look at the VIX. The VIX was so high, okay? Just Wednesday, right? Yesterday, the VIX was at 29. When the VIX is that high, options are very expensive. So I can't buy calls or puts. It's just too expensive. It doesn't make any sense, especially when I know there is a high chance, not only where the divergence is forming, but also we have the options max pain. I know that price is going to reverse to cause maximum pain to options buyers. So what should I do? Well, why don't I just do what the market makers do? I become an options seller. So I sold puts when we were at 38.40. Okay, I sold and I was very safe about it. I sold 379 by 37. Let me double check. Wait a second. I'll tell you guys exactly. Let me double check. This is how you know I actually did it, because I have to check. Okay, 379 by 375 puts. I sold them yesterday and I was given 80-cent credit. 80 cents per pair, which equates to $80. It says 80 cents, but it's actually $80. And now they're worth $9. Okay, so I have a 90% return. I'm not even going to close it out. I mean, I could close it out and just take my 90%, but I'm just going to keep it open until tomorrow. I might as well collect the other 10%. It's not a huge amount. If it was a massive amount of money, I would say just close it out, because why risk losing anything for that 10%? But it's not. It's like $1,000 profit. I mean, it's still good. It's nice for a day, $1,000 profit. But that was just like one easy trade that I did based on paying attention to the options and paying attention to what's going on with the market and things like the VIX. Okay, when you understand all of this, you can put it together in a holistic way and use it to generate crazy profits sometimes. Okay, so let's go back. So this is what we know what's going on. This is why the S&P rallied like it did. What does the dashboard say? The dashboard gave us a signal of bullishness on March 14th. It also gave us a signal on March 1st. What about Bitcoin? So interesting signals from Bitcoin here. We had our breakout on March 6th. Great signal, right? So if you go back here to Bitcoin, where is March 6th? Here's the long signal. February. March 6th, 22,300. You were underwater a little bit at first, and then you're in massive profits. Now, though, it's falling off. It's coming down. Still didn't cross over, but it's interesting that it's coming down. So be careful with Bitcoin here. There's bull and bear signals. I'll get into Bitcoin a little bit later, but you want to be careful with crypto, because it can be very tricky, a lot more than normal markets. So right now, we crossed over on the 14th, and we're still bullish as of the 15th. So the breath, what did the breath do with the S&P? Let's go to a 4-hour chart. So here's the 13th, 14th. But right here, 14th, this is the crossover. So it would have gotten you long here. You're basically in profit now. And you're still in profit, and it's still long. So I like what it's showing, but I'm a little bit concerned, and we'll get into the S&P and why I'm concerned. Okay, so that's the dashboard. We had a crazy week with the news. You know, it's been just up and down, like, I don't even want to say it. Brian always says it, but I'm not going to say it. But this is the most volatile the market's been in a very long time, especially in overnight hours. And this is because of all the news coming out from the central banks. I mean, we had the Bank of Japan talking this week. We had the ECB talking this week. We had the Fed come out with some comments. If I'm trying to find these news articles for you guys, I went too far back. Let's go here. Let's go through each of the news events. March 10th, 11th. Okay, this week. Here we go. So Fed announcement on Monday the 13th. So there we had a Fed announcement. Okay, and then Tuesday we had CPI, which came in basically in line and did nothing, but it was an excuse of the market to liquidity hunt. So it just hunts liquidity. Most of these news events are excuses to execute some move that benefits market makers. Okay, then we had core PPI. We had Empire State Manufacturing. This came out. This is bad. This came in very bad. If we look here, okay, greater than forecast is good for currency, blah blah blah. Yeah, so it's showing a weak economy to a degree, and you guys can read it quickly here. You can pause it if you're watching this back later to read that. Core retail sales came in line, and PPI came down a bit, and you can see consumer inflation. So it's down. That's actually a good thing for the hope that the Fed's going to slow down the rate raise. Retail sales were also down. I think it's not good for the economy, but it might be seen as a positive for will the rate increases decrease. So right now, I think we're looking at a 25 basis point increase from an originally a 50, but we'll see. I feel like it's not very trustworthy. I don't even like talking about it. Next week, going into next week, we have, let's see, CPI for Canada, not important, no offense, Canada. Okay, so the big thing is FOMC economic projection statement and federal funds rate. People are thinking 25 basis points. I don't know. I don't know what's going to happen. The ECB surprised with the 50 basis points, so maybe the Fed surprises too. Oh, my green screen just fell on me. Wait 1 second. Oh God. I was like, what is that hitting me in the head? Wait, you guys can't see it because it's like clear with the camera, but yeah, I just got hit with my green screen. Hold on, I'm being attacked. Okay. Nope, it's still attacking me. Why is this happening? 1 second. Okay, I think it's good. I'm being attacked by what looks like an invisible object to everyone out there. It usually never happens like this. Okay. All right, I think I'm good. That was a little bit freaky, and now I feel like my camera's messed up. Okay, so back to what I was talking about. Federal funds next week. What's it going to be? 25 or 50? It's possible it could be 50. And that's only because of what happened with the ECB. And I think Powell's dead set on lowering inflation, but it's really, who knows? It's a crapshoot. All you need to know is that regardless of what it is, it's a liquidity hunting event. They're going to use it to hunt stops on both sides, and things will go back to usual. Just follow your charts and the technical analysis, and things will work out as long as your technical analysis is generally correct and you have something that has been time tested and works with 50 to 100 trades. Okay, let's go look at the market. Let me calm down a little bit. I'm going to drink some water. You know, it's not every day you get attacked by a green screen. I think my OBS is off, by the way. Hold on 1 second. Let me adjust here. What happened? Okay, there we go. Good. All right. Let's look at the markets here. Let's go to a 3-day chart. So here is, we're gonna make this bigger. Okay. And we've got all my crazy levels marked out. And this is our downtrend line right here. And let's go to let's go to a daily chart, you know. So this is, I want to extend this just a little bit like that. Okay. Okay, so this is the meme downtrend line, and you can see how the market just stopped there, and we've been playing with this level for 1, 2, 3, 4, almost 5 days now. It makes sense, right? It's the meme line. It's major level. And you can also see from this M top, I'm going to get rid of, I like this. I've been experimenting with a couple different things, but I'm just going to get rid of it. Anyway, this was the M top, the initial M top right here, right? So M top, M top breakdown, okay? So that M top breakdown allowed me to draw a chaos level, and that chaos level gave me very important levels. 1.618, you can see we paused here and bounced. 2.618 was the next level, paused and bounced. All predicted, all expected, kind of obvious actually. And I talked about this before. And the final level is our chaos level down here at 3,600. Okay, that's our final chaos level. And where I expect the market to go, maybe even lower to hit the midpoint of this downtrend channel. That's what I'm thinking. But the market cannot do it unless enough people are bullish that it has liquidity to pull to then move to create that down move. It can't have more people making money than people are losing money. It's not how the market works. More people need to lose money than make money. It has to be that way. And until that is set up, then the market cannot move down. Now, I think the big thing is this quad witching week. We need to have that expiry, and then perhaps next week we get that big move down. And you can see there's big levels here, right here in this 307 zone. We might get a pause there before we finally go down to this level, but I do expect us to tag this level at some point. You can see on the daily chart, this is our downtrend line right here, right there. And until we break out on the other side of this downtrend line, I'm bearish. I have to be higher time frame bearish. However, yesterday I was bullish because of the quad witching options expiry, and you can see we got the rally and I made nice profits. Let's go a little bit lower time frame here. 8-hour chart. So on the 8-hour, you know, it looks quite a bit more bullish, and you could have easily drawn something like this, right? And then here's essentially you would have tried to buy in this zone somewhere down here. Once you W'd out, you could have just started drawing a trend line, and you could even wait for your trend line tag, and then your tag is here, and you buy down here, which is essentially what I did, except I sold puts because the VIX was so high. It didn't make any sense to buy calls because the options market is so high, and when the market goes up, the VIX goes down. So I'm like swimming upstream when I'm trying to make profits from those calls. Even if I'm right, the premium is going to come down, and that's going to hurt me. So the safer thing to do was to sell puts and long in spot if I really wanted to double down. But I didn't. I just closed a bunch of short positions, and then I sold those puts. Okay. This is a 4-hour. So this cannot push too much higher. The one issue that I have with this is that if it pushes much higher, it's actually a massive breakout, and we could move a lot higher. So that's my only concern, and I think the market knows this, and that's why we're kind of it's struggling in this zone. I don't want to see us go above this 1.618 level. I don't want to see that. All right, so quad witching is a big thing, and then I think we're just gonna play around in this zone. I don't think anything's gonna happen until the FOMC meeting. I think we'll just play around here until FOMC, and then likely move down, but I'm not sure. I think it's the narrative is being set. My opinion is that the narrative is being set up that, oh, the Fed is not going to hike 50. They're going to hike 25. And then when they do only do 25, everybody's going to be like, wow, it's 25. Okay, go up. And the market will shoot up like this, and then it will dump. That's my expectation. When is it again? The exact time? Let me see here. FOMC federal funds at 1. Oh, that sucks. So I'm going to do the live stream, and then it's going to come out right after. That sucks. 1 a.m. It's going to be 1 a.m. my time. Okay, well, we'll see. We'll talk about it next week because it's not even going to happen for another week. Okay. Well, let's talk about what could happen with the S&P in the short term here. 15-minute chart. We've got a Tom to Mark 7, 8, and 9 that came in. Nice reversal could come in here. Where could we go to? If I change this to Fibonacci normal. Okay, and I reverse it. All right, so in the short term, maybe we pull back to the 38.2 before we head a little bit higher. That's definitely a possibility. What does chaos tell us for targets? So there's your little W down here, right? Let's make this little, okay, that, and that's the low here. And your target is 39.60. We didn't hit the target. So that we could maybe get like a little pullback like this down here and then bounce. And that's our target, 39.60, and then we play in that level in through Friday. That's what I'm expecting in the really short term for the S&P. There's my quick analysis, which will be useless in 2 hours. Okay, so yeah, that's my expectation going into Friday. By Monday, probably range. I'll update in my room of what I'm doing. I think, you know, it's already been, how long have we been going? How long have I been talking? 20 minutes. All right. Yeah, so I got about 9 minutes left. Everyone likes to hear about Bitcoin. I always like to do just S&P and Bitcoin. So let's do Bitcoin, and then we'll save everything else for the after party, especially gold and dollar. Really important to look at. I want to look at those and talk about those. But we might as well look at Bitcoin and what's going on with Bitcoin, because it's kind of crazy. So Bitcoin completed the 5-way pattern, right? Now it's starting to form a new pattern. The question is, where is it going to go? So here's, it's very bullish on a weekly chart. You can see my indicator used to be bear, and then we turned green. Bull, 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 bull. And we had a very nice weekly close last week. And now we've got this interesting daily pattern that it has me concerned, but at the same time, it has me feeling extremely bullish. So there's that's kind of your breakout, right? So if you're following a daily, this would have been like your long, and we're sitting up here. If we head to a little bit lower time frame, like a 4-hour. So here's the issue, okay? If I look at a weekly and I look at a daily chart, RSI is sitting in a very bullish zone, saying, okay, this is a continuation. We're going to continue higher. However, the 4-hour has broken down, but it's still in a bullish area. And if I go a little bit lower, this 2-hour, I would draw something like this, and this would be your breakout. However, we didn't break out. This was like a fake out, and it's actually reversing. So then you would have to draw it like this, and you have to wait if you can get a breakout. And if we get a breakout, right? However, right now it's a little bit concerning to me. If this breaks down this 1 hour, we can go lower. But what I would be doing right now is I'd be looking for longs. I would seriously be looking for longs, because I think it's a very real possibility that we can teleport right to 28 or 30K. My only concern is that it's so obvious that it can't happen. Like, it's not going to be that easy. So here's my ABCD move, leading us up to basically 30K, and you've got a 61.8 retracement at 28 from the entire range. Those are your two options. I wouldn't be surprised if Bitcoin does what Bitcoin loves to do, which is this. Tag the monthly and then head up here. So that's kind of what I'm expecting a bit. Something like that. I just don't see this. I don't see this going down unless it's a massive fake out. And if it is, you'll know very quickly if it smashes through 23K and just keeps going down. But this weekly is very bullish. 3-day is bullish. Bit of a divergence here, though, actually. Quite a very big divergence. I'm not a big fan of what I'm seeing. Also, the daily chart, right? So you have lower low and RSI right here, like this, but higher highs in price. So that is also concerning. Why are we getting these kind of higher highs in price but lower lows in the RSI? That's a bearish sign. Maybe the things are getting tired. So that concerns me a bit. I think the bull case is the bull case until proven otherwise. But if this M's out, if you go to a 4-hour, if this RSI M's out, then it could break down. It's just that simple and roll over. So something to be aware of, something to prepare. Somebody's saying COBV on one day. COBV. I don't really like looking at too many indicators, but we can look at our OBV. Yeah, I mean it's looks better. It doesn't look that different than RSI to me. Maybe I'm not reading it perfectly correctly, but it doesn't look particularly amazing to me. It's in the positive zone though. The weekly is the biggest thing here. The weekly is very positive. Everything's positive. I just Bitcoin always scares me. It always causes shenanigans. And a lot of people are super bullish. Everyone's very bullish on crypto if you look on Twitter. So I'm a little bit concerned. I'm really concerned. But I've got to go with the bull case. Hopefully everyone has some spot here in case we do get that move to 28 to 30K, and that's where you can look to maybe offload some of your position. Okay, that's my view on Bitcoin. I know it's not perfectly clear, but I would consider pullbacks down to this zone, 23K, buying opportunities. If we go much lower, basically down to 22 is maximum, but below that, I would start to get extremely worried. And especially if RSI turns negative, you have to be careful. Let's look at the total really fast. You can see total. I also have an ABCD right up to the top of this parallel channel that I drew a long time ago, since basically the start of this bear market. This is my parallel channel. And it essentially goes, wait, I gotta set this on a log scale. So there you go. There's the log scale where, okay. So now I know what happened. We actually broke out of this parallel channel. That was the other thing that makes me more bullish on crypto, is the fact that we actually broke out of this parallel channel. We're on the other side on a daily chart. Yeah, right here. So here's your breakout. And that tells me, okay, well, we can maybe start considering a bull, especially on this daily here like this. This is your breakout, right? Like that. Slight pullback. And then it should simply move higher. It's that simple. And we did get this really bullish weekly reversal right here. Extremely bullish. I mean, I don't know why they would hunt liquidity like that if they didn't plan on taking it higher. Normally, this is something that Bitcoin does before it moves higher. I just feel like it can't be this easy. It's the only concern. And this 4 hour doesn't look great. It looks like it's trying to M out. But anything can change just by one of these candlesticks. If you're in spot, I think you're fine. But I would be careful with adding and with any leverage up here. We're either going to teleport up another 20% everywhere, or we're going to roll over. And a lot of people are going to get hurt really bad, because I know a lot of people that are long a lot. So you got to watch. You have to watch maybe on these lower time frames, like even this 1 hour supporting. But if it breaks down, that's your indication. Okay, we can head down to these lows first before maybe we move higher. I can't give too much forward analysis on it, because it's not clear right now. It's in a very difficult zone, and there's multiple scenarios. So these are kind of your scenarios, like this, or this, and like that. Those are basically your three. The most likely one is this middle one. So yeah, I like to give you guys more, I guess, how do I say this? It's more actionable ideas. But that's just the market right now. And there's really, nothing. Sometimes it's better just sit on your hands and watch to see how it plays out, and then take action once you get something that's more clear. Okay, I think I've been talking for about, how long have I been talking here? 28 minutes, 29 minutes. Okay, so that's 30 minutes. Hope you guys enjoyed that summary. We went through SPX, Bitcoin. We looked at why the SPX rallied with the quad witching tomorrow. Something to definitely pay attention to in the future. Made a nice $1,000 on that trade. Yeah, okay. So if you have individual questions, join us in the after party. It tells me we have more down to go, but this pump threw me off. Yeah, Kayla, a lot of people, I think, were bearish. So the reason it pumped is because so many people were bearish. That's why it's perfect, look easy to hunt liquidity. But now I think in crypto land, too many people are bullish. That's my concern. Okay. Anyway, so we're going to go to the after party. We're going to talk about gold. We're going to talk about DXY. We're going to talk about any kind of crypto stocks that you guys want to look at. We can look at individual stocks, Tesla, Nvidia, Microsoft, whatever. Okay, everybody on the public show, or anybody that watches this later, hopefully you have a great weekend, and I will see you on the TRI site. All right, bye.